Okay, so the question about timing, like I said, it's regardless of the context, the time of the day, time of the week, time of the month, time of the year, opening of sessions, closing of sessions, opening of candles, closing of candles, all it's very important. Okay, so let's start from the minute concepts of timing, the candlesticks. All right. If you are the type that wait for candlesticks to close, depending on what time frame your entry is, you have to be patient, you have to wait. Then if you are the type of person that trades only London session or trade only New York session, you know that anything that precedes that, anything that precedes the London session is a preparation. You get to get a feel of what the market is doing before you actually come on the chart to look for a trade. So that timing is also important. You have to understand what time each session open, what time each session closes, what time is the session overlap, how long is the session overlap, how long that session overlap is for, how long is left for that session to close, who is in charge of that session at that moment in time. So for that one, you have to take into consideration a rigid, how do I put it? A rigid time confluence or a rigid confirmation checklist for your timing. So I only trade New York session, so I have to be on the charts. Depending on the time of the year, it can be an hour before New York open. It can be 30 minutes before New York open. I have to come on the market. I have to check the charts to see what the London session has been doing. Is there enough momentum in the market for me to take a trade in New York? Is there enough news? Is there enough economic data that will push the market in my direction, or will the market respond to an economic data based on the time? So you might have, right now is daylight saving, so instead of 1:30, we are having news by 2:30 now. So for those that didn't know, they will be waiting for news at 1:30, but now the timing has shifted. It's now 2:30. So you have to wait to say, okay, so I have to be in the market by 2 o'clock, maybe wait for this data release, or I wait to see the data release, what they are going to release, what the actual is in regards to the consensus and the previous. All of that is part of the timing, how you base it. So that is session, that is timing in sessions, timing in economic data. Then you have timing in time of the year. At the time of the year, we are in daylight saving time now. For Euro, the time has shifted -1. For Eastern Standard Time, that is for those in North America, the time has moved +1. So for Europe, the time has moved -1. For US, the time has moved +1. And also you have to know that since the year is coming to an end, the amount of liquidity, the amount of volume, the amount of contracts that will push the markets is going to be limited. It's not going to be too much like before. So you have to understand that you can't take swings like you used to, during the midpoint of the year. So November, December, say second, third week of December, the liquidity, the momentum of the market starts to dry out. That you already know that you don't have to take swings too much. Then January ending, February third week, you see the momentum start to pick up. So those are time of the year. Then by March, you know that the daylight saving is going to come to an end. Then all the times are coming back. Instead of 2:30 for news release, you go back to 1:30. New York opens 1 o'clock. Index, the stock market opens 30 minutes after. So do you understand where I'm getting at though? Okay.
Yeah, I totally understand you. I totally understand everything you just said and the new information you just shared regarding the months and all that. But I want to ask if you let's say for instance you're trading, you trade London session and
Yep.
New York section, right? Let's
Yeah.
say for some reason you're awake earlier before the London session opens and you see your
Yes.
setup on the charts, would you trade it or would you get that? That's basically
Yes.
I mean
Yes.
as time
I
and the
understand. Yeah.
confidence. If you see your setup when it's not within your time range,
Yeah.
will you trade it or
Okay.
just see it as one of the manipulations that the market could be building up?
Yes. For me, I have no time constraints. I usually tell myself if I see a setup, I take it. But um, uh, for for me, I usually am very rigid when it comes to those type of entries. So now it's 7 p.m. So once it's past 7 p.m., I don't take any trade. Anything before 6 a.m., I don't take any trade also.
Okay,
Okay.
that's fine.
So
All right,
yeah,
all right.
so the session overlap for me. I like to trade session overlaps. So I like to trade Tokyo London session overlap, which is 6 a.m. to 8 a.m. Then
Okay,
I like to trade London New York session overlap, which is now the time for the session overlap is
2:30.
one is it no 2
Yes,
o'clock, two
yeah,
o'clock to 5, 2 o'clock
yeah,
to 5 or 6. All right.
yeah.
So during those periods, those are the times I like to take trades. So that's my own concept of timing. Anything
Right.
before 6 a.m., I don't take trades. Anything after 7 p.m., normally 6 p.m., but now that the daylight saving is going on, my H4 candle no longer closes at 6 p.m. It now closes at 7 p.m. So anything after 7 p.m., I don't take any trade at all. That is a personal thing, though, because one, I don't like to pay swaps. I don't like to pay swaps on my trades. So I don't take any new trade. Sometimes if the trade I'm in is not in good profit, by 7 p.m. I close the trade. So that's it. The only time I hold trades, the only time I hold trades to pay swaps is when I'm trading AU and there is a news release for AU at 1:30 a.m. or 2:30 a.m. I try to hold the trade, stay awake till after the press release, after the news release, and after that, I close the trade and go to bed.
All right.
So
Thank you very much.
yeah, so if you see your confirmation checklist before your time of taking trades, then you have a choice. But for me, I will not take the trade because that's me breaking the first rule of my trading plan. If I say I trade London and New York and I see a setup before London, why should I take it? I'm not supposed to take it. If I take it, anything will can't happen. I have to bear the consequence, win or lose. Yeah.
All right. Thank you very much.
All
So
right,
my
man.
second question is, uh, how do you build discipline in forex? Because
Yep.
we all know, or we all say it, and everybody keeps hammering on discipline. You have to be a disciplined trader and all that. But I can tell you that I'm still blowing a lot of accounts, guy. Like, you wake up in the morning, you create a plan, you tell yourself this is what you're going to do, and this is what you're not going to do. But really, you're in front of that chart and you're trying to decide on on the trades and all. It's like every other thing just flies out of the head. For
Yeah,
me, I
I
can't say that for
understand.
everybody, but I'm new to trading. You get, so like managing all these things is most times it can be very overwhelming. So I just wanted to ask, how do you view discipline as a trader, or what
For
would you advise?
for discipline, yes,
Yeah,
it comes with experience. All right. Even if I tell you don't do this, don't do that, it's like the swear with the swear give us. We have to experience it ourselves. Yeah. If we
yeah,
don't experience it ourselves, we cannot become disciplined. It's like you can't tell a child not to put their hands in fire because they'll always want to put that hand inside fire. They want to experience it. Unless they experience it, it's like a vacuum. It's like a vacuum. It needs to be filled. You need experience to fill that vacuum. It's like an empty space. If you don't have enough experience, that space cannot be filled. All right. So
yeah,
you have to experience breaking your rules to appreciate not breaking it. Okay. So you
yeah,
should always have that self-reflection and self-awareness. That's why it's good to journal your trades, to journal your things. You lose this trade, or why did I lose? You have to be self-aware why you lost. Oh, I lost because I did not wait for this, I did not wait for that. Okay, so that the next time it wants to happen, you have already experienced something like that before. You just have to tell yourself, oh, I've experienced this before. I have to be disciplined enough. A, a perfect example is this. I was showing my students this. Where was it? Where was it? M15. Example. It's not even an example. It's exactly what happened. So this is EUR USD. Okay.
okay.
Ideally, can you see my chart?
Yeah, I can see your chart.
Is everyone seeing my charts?
Yes.
Okay. Okay. So So focus on this. My focus is on this here. Okay? On these three, this bearish, this bullish, and this bullish candle here. Let me make my crosshair bigger so you guys can see. No swallow me.
Sorry, sir.
Okay, can you see my crosshair better now?
Yeah.
Okay, so our focus is on this bearish candle, this bullish candle, and this bullish candle. Okay? So this is where discipline comes to play. This is where discipline comes. Let's use this one. Okay, so you can see on this time frame, I had this horizontal line on the top of this bearish candle. What was I waiting to see? I wanted the market to engulf. I wanted the market to engulf this. Okay, I wanted the market to engulf this candlestick before I took a trade. Okay, now what did the next candle do? The next candle went up. Can you see it? Went up here, broke the high, but went back to close inside of the candle. Okay, now this is some sort of bullish engulfing, but for me, I will not take it as a bullish engulfing. Why? Because it breached the high of this candle but went back in. I wanted the next candle to do the same thing. It went up but came back to close back inside here. If it's the Alex of before, the Alex without enough experience, I would have taken the buy initially here. Okay, I would have taken that buy initially from here and see how it fared. Now it went up a little bit but came back down. I would have been in a losing position around all these points here. Okay, so me waiting to see some type of reason to take the buy again at a better price gave me a better entry inside here than having to have an entry inside here. So if I did not have that discipline, if I had not experienced some sort of failure, some sort of losses, I would not have been able to take this trade at a better price. I would have been taking the trade at a wrong price, even though it finally went higher. But because I was not patient enough, I experienced some sort of drawdown, some sort of emotional roller coaster because I did not follow my trading plan. All right. So you can see finally it broke it. And I remember showing my students that I was looking at the market coming back here. The market came back here. I got in again at first entry. Then the moment the market came back down here, I saw this type of setup, a close. Then I expected the market to just come back. So that helps me to be disciplined because I've experienced a lot of things. So in this, our journey is you have to break the rules to experience something. All right. So another thing is know the rules before you break the rule. All right. You have to know the rule. How the same way how these financial gurus usually tell you how to evade taxes, how to reduce the amount of tax you pay. They find a loophole in the law and they place their foot on the neck of that loophole and exploit it. It's the same way you should know the rule. You should have a rule before you break it. Understand the rule before you break it. If you don't understand the rule and you break the rule, it gives you another kind of experience, not a pleasurable experience though, but experience na experience. I hope you're getting me.
Yeah, I am.
Yeah, so when it comes to discipline, just know that boils down to experience. Regardless of anything I will tell you, if you if you've not experienced it, you will not be able to comprehend what I'm saying.
All right.
All right.
Thank you very
So even if I say don't buy higher highs, buy higher lows. If you have not bought a higher high, you will not know that is a higher high until the market starts to go down, give you some type of higher low, then you'll be like, oh, okay, oh, that's a higher high. I thought it was not a higher high. I thought it was a higher low. This one, that one. So that has given you some type of experience and some sort of discipline that when next you are in such scenario, you you have enough emotional and mental dexterity to not pull the trigger every time. Because there is also something I usually tell my students, you don't have to trade every day. Show up, but you don't have to take trades every day. All right. Not be every time. Don't be a junkie. Don't be a drug addict. Don't be like drug addicts. Don't be looking for trades up and down, up and down, up and down. You have to be like snipers. Snipers don't just shoot up and down. They have to be patient. They wait for the right moments and before they pull the trigger. That's why snipers hardly miss. They've practiced. They can be in one position for hours. The moment they pull the trigger, they get a result. They get a feedback, a good feedback, or a bad feedback, depending on what they did. All right, so you have to be patient. Wait for setups. Don't chase setups. If the entry does not get to your points and starts to pull back, you have to reanalyze to see if you can jump in. Don't just jump in. Don't be anxious to just enter a trade. Another thing I usually say is no trade is better than lost trade. All right. It's better you no see trade take than you force yourself to take a trade and you lose the trade. So no money is better than lost money. All right. Now another thing where they always talk about also. So no money is better than lost money. You don't see a trade, don't force it. Don't force yourself to take a trade because if you force yourself to take a trade, 9 times out of 10, it always ends up with you on the losing end. The same thing with those that do go big or go home. One of my brother is here now. Me and him, we they do go big or go home. all the times we do go big or go home, we always go back home. Yeah, so that's another type of discipline that you have to learn. So you just have to have a rule. Try to not break the rule, and if you break the rule, journal your emotions after you've broken the rule. After you realized that you've broken the rule, start to journal your emotions, how you felt, how you are feeling during the trade, how you felt after you closed the trade, how the trade closed, what have you vowed to do and not to do. These are the ways to fast track your progress in the markets. I hope you understand.
I understand. I totally understand.
Yes, sir.
Thank you very much. That'll be all
Yeah.
from me to you.
Okay. Thank you. All right. So, any other person who is P? Hasi, Kevin. Anyone have any question? Oh, okay. The guy that had a question don't come out before. Philip, do you have a
Nah,
question? My brother. Um, David, question. P, question. I say, what they do for my class? You have a question. Ask question. Oh. Ask question. Regardless of how basic it is, please ask. I'm not supposed to get questions, so let's see. No question? Oh, shit. No, not yet. Okay, you guys don't. Oh shit. Okay, he left. Philip,
good evening, sir.
yeah. Are you having any difficulty, or you you don't turn guru?
My difficulty is taking a trade. Most times I
Taking.
like taking a trade, knowing a setup, trying to get like get a trade. Sometimes, most times I enter wrongly, and I'm still trying to figure that out.
Okay,
Yeah.
that one's FD. So let's go. Let's start. What time frame do you analyze from?
Basically M15, but I
You.
look at it from H4. Then I
Okay.
want to try to get my entry from M15.
Okay. So you look at you start from H4. Do
Yes.
you so H4, H1, M30, then M15, right?
Yes. Yes.
Or you just jump from H4 to
No,
M15?
H for H1, M30, then M15.
Okay. So okay. Then okay. Let's do this. Let me see. All right. This is something I usually teach. It's called order of flow. All right. The
Okay.
order of flow is something like this. Okay, so we have the order of flow. This order of flow is how I analyze. Okay, it's how I analyze. So I usually start with structure, then I go to price action, I go to technicals, and then indicators. What do I mean by that? Then my students who they are not tired, they already know what I want to talk about. I don't trade with so much indicators. So for indicators, it's usually optional. Okay. So usually structure, you do understand structure, market structure, right?
Yes.
So we have this, we have this, we have this, all right, so we have the market going up, going down, and going sideways, right?
Yes.
So that's structure. Then price action. Price action is exactly what is happening around here, 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 here. Okay?
Yeah.
At these points. Then we have the technicals. Technicals are support, resistance, demand, supply, trend line, counter trend lines, Fibonacci. Okay?
Yeah.
Then we have indicators, which is moving average and RSI or ADX, depending on the one you do. Okay? So this is the order of flow for me. First, I have to understand what structure is, and that's something I would advise you. Once you are on the H4, you have to understand what the H4 is doing. Where is the H4? Is the market an uptrend? Is it a downtrend? Or is it a consolidation? If you've established where you are as, oh, the market is in an uptrend or downtrend, then you have to hold on.
Okay.
Wait, it does it, man. Now my students, they don't clown me inside our group chats. They don't clown me inside group chat like this. So if you've understood where you are in the market, the next thing is the price action. You have to understand what the current price is doing, current price. So when I mean about current price, what is the current action of the price? Is the current action of the price giving you these things? These few things. Is the current price of the market giving you, hold up, is it giving you exhaustion? Is it giving you rejection? Is it giving you momentum? Okay.
Yeah.
Lord. So you have to understand what current price action is doing. Is it giving you exhaustion, rejection, or momentum? If it's giving you exhaustion, that means you are preparing to take the reversal. All right. Exhaustion,
Okay.
rejection, they are almost the same thing. All right. But
Okay.
one main difference. This is exhaustion. You see, one price is exhaustion. One candle, one candlestick is exhaustion, buyer's
Okay.
exhaustion. But rejection is multiple candles. Let's say you draw a line. Let's look for a better one. Okay, something like this. You draw a line like this. EU. What did I do? Let's use this one. You draw a line like this. Can you see it?
Yeah.
Now,
Yeah.
you see that every time the price comes inside all these areas, there is something called rejection.
Okay.
Okay?
Yes.
So, is the price doing one of the three? Is it exhausting? First sign of exhaustion is a wick. All right. So once
Yeah.
you see a bullish, bearish, and there is some type of or some type of exhaustion, like here now, you see it is a buyer's exhaustion because after this point, after here, we had a bullish push, bullish momentum, but we now finally had a some sort of buyer's exhaustion.
Oh.
So if you place a straight line between that cuts across the bullish and the bearish candle, you see that that is an exhaustion. It's a buyer's exhaustion, but over time it acted as some type of rejection. All right, so you see that
Yeah.
every time the market broke through it, came back, broke through it, came back, reject, came back, reject. All right, same
Yeah.
thing as this. Test, then finally broke it. So you have to identify what the market is doing. Is the market in an exhaustion phase? Is it in a rejection? Is it having enough momentum? If the market is having exhaustion and rejection, that is your point. If you don't enter the market when the momentum has just started, it's not a good time for you to enter again.
Oh.
All right.
Yeah.
So that's you chasing the market. So you have to enter the market. So in an example, this point here,
Yeah.
let's say we draw this line here. We identify this exhaustion here and we drag it to the future. We get a rejection from here. Okay.
Yeah.
Then we have we're expecting some type of bullish engulfing. Yeah. It
Yeah.
finally happened here. but we are seeing some type of buyer's exhaustion inside this candle. Now, if you don't enter it from here, okay, if you don't enter the market from here and you want to go enter from here, overall it played nice, but it's not a good entry. This is you buying a higher high. Okay. Now, if you don't understand, we have this. I hope you see it now. So anything before the break of this place is a good entry. Anything above is now a higher high. You have to wait for some type of higher low. And at that higher low now, you now see something here. You see that rejection from this point. And if you go, say, 15 minutes, you'd see rejections and exhaustions and whatnot around that point to show you where you are in the market. So we have gone back to number one, structure, higher low, exhaustion, rejection, and you don't enter again. Now, this is another nice entry for you. Is a nice bullish engulfing here. A nice one, bullish engulfing, with your stop loss below this point. And you see that the markets now went. So it's now a good entry because you are not buying a higher high, you're buying a higher low, because based off of that, where price is still trading below this level. Okay?
Yes.
All right. So that's it. So I've talked about structure. I've talked about price action.
Yeah.
So price action is exhaustion, rejection, momentum. Now technicals, it's about the support, resistance, supply, demand, Fibonacci. So that's where you get to start to pull out your Fibonacci, understand where you are in the market based off of, you can draw the Fibonacci from low to high. You want the market to come into 38.2 to give you a confirmed higher low scenario. Now, in this case, it did not come to 38.2. So for me, ideally, I would not take that trade.
Okay.
All right. So it did not come to 38.2. 38.2 is my first point of realizing a higher low. All right. So then we have the support resistance. You can also have supply demand. There are different ways of identifying supply and demand. You know how to identify support and resistance. But there is another way of identifying support and resistance. To me, I'll show you the two ways. Some people like to draw from the lowest points as supports. Okay.
Yeah.
Then there is me. I like to use two candles to identify support and resistance. So the market is going down. Our first point of support becomes the point where there is some type of rejection. Where is that rejection? This is it. We have bearish candle. We'll go bearish, 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 bullish. That's support. We have bullish, 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 bearish. That's resistance. bearish, bullish. I identify it and I draw a straight line the same way, trying to look for that exhaustion. And I call it the median point. It's a median price between the sellers and the buyers, or a median price between the buyers and the sellers. So this price went to this point, came back down. Price also went to this point, breached it, and then came back down. So it's a median price between these two. If you add these two prices together, divide by 2, all those are mathematics where you really need. But just drawing it, identifying a median point, a median price between the clues. So these are the two ways I usually draw my support and resistance, and I usually tell people to try both out. One, none of it is wrong. The two of them, they correct, but you just have to draw it at the right point. No need to draw support and resistance here because it's not relevant. Okay?
Yeah.
It has to be the how do they call it again? It has to be a fair price, a good price. All right, where there is significant rejection, where there is significant reversal from the market. All right, so we have some type of reversal here. We can draw one here. Okay, we have a significant reversal here, so we can draw one here again. We have a significant reversal here. One here, one here, one here. You can draw here. All right. So that's identifying support and resistance. That's me using the technicals. Then indicators is just the moving average. Where is the moving average pointing at? Or where is the RSI situated? Or where is the ADX? Which all those, the indicators are optional. I don't usually use them. But they are just there for gain. They just did there just today. They are just there for the gain. Yeah.
So, at what this in time frame do you draw your Fibonacci?
It depends. If I'm looking at the overall, push, I usually draw on H4. Yeah.
Yeah.
Brenda. Seldom, not too often. Come on. And I don't, not too often though, that I draw Fibonacci on lower time frames. I used to do that, but not anymore. Yeah, so, but just once in a while, I just did chip them in, but not like it's something I just put in my pocket and say, oh, I'll draw Fibonacci on this lower time frame. Now, but ideally, I always draw on the higher time frame because it allows me to focus on the overall push. So take, for example, I do this. Hold on. Let me clear some of these.
Okay.
Okay, so now on this time frame, this is the H4. I understand that currently the market was going down and it has transitioned to higher highs, higher lows. I can draw my fib from this to here to measure. Okay, so we got the 38.2 here. That means this is a confirmed higher low for me.
Okay.
Then I can now draw from here to here to measure. It did not get to 38.2, so I can't call that a higher low. I can push it higher again. Has not gotten to 30, it did not get to 38.2. It went back.
Okay.
So I'm still expecting it. But if it does not get there and continues to push, I would want to see how price will react when it gets here. You see that
Okay.
coincidentally, it's a confluence to price looking back to your left. Okay.
Yeah.
So overall, I use the Fibonacci on the higher time frame to measure the overall push of the market, so I know where my final target will be. Then I go on lower time frame and try to see how the market is faring, because as it is above, so it is below. I want to see if there is structure on the lower time frame. There we have a break, low, have a push. So potentially we might get another higher low. We have a break here. We have some type of counter trend line or trend line here. If we get a break, retest, then we resume. If it continues to bounce off, continue to push higher. All right, so that's really it. If you want to draw Fibonacci on this time frame, not really advise them.
Okay.
So let's see. So this spike here was caused by news. You have to forget that spike. The market went to 38.2, has gone to 28 points, minus 27%. So that means this point becomes a good higher low. Then we adjust the Fibonacci, expecting a 38.2, but for me, I would prefer the market to come back down inside here again before continuing.
Okay.
Yeah, so for me, I don't really need the Fibonacci on the lower time frame. It just is some sort of cluster on my too much noise on my charts, because I like to see price action well. Less is more is something I usually preach and something I usually teach. Less is more. I prefer to just look at price action well. By the price action, we'll know we can recognize what's popping. Yeah.
Chief.
So, yeah.
Sorry, I don't know if So speaking about the fib, right? I know about the I think 70, 75 level and the 61 level.
Yeah.
But I'm really not conversant with using the 38.2 level. I don't know if this is I really don't know.
You see
Because I
those
feel like
the levels before 61.8, I call them shallow retracements. All right. They are shallow in a sense that the market has strong momentum if the market is very strong, you don't expect the market to give you a deep retracement. There are two types of retracements, the shallow and the deep retracement. Anything before the 61% is called a shallow retracement. Anything below the 61.8 becomes a deep retracement. So if the market has enough momentum, like it's very strong, pushing in one direction, you don't expect it to go to the 61.8. Like how I used to explain it to people. You are running. If it takes you, you start from here and your finish line is here. If ideally you run without stopping, it takes you 1 hour. Okay?
Yeah.
The moment you start to run and you get to one point, you take a breather. It has already increased the amount of time for you to get to the finish line. That's what the retracement is now. Now, if you take too much time to rest, you know that it's going to take you longer to get to your finish line, right?
That's true.
But if you take small rest and you continue, it's going to take you shorter time to get to your final destination. And if you do not rest at all, you get there finally faster. So this one might take you 1 hour, this might take you 2 hours, and this might take you 1 hour, 30 minutes.
Thank you very much. I understand that.
All right. So that is basically how the 38.2s and whatnot, how I try to explain them. So if the market is strong enough, has enough momentum, I don't usually expect the market to go to 61.8. But
All right, thank you very much.
the same thing is still what you are looking for is still the same thing. You are looking for exhaustion, rejection, momentum. You are looking for market structure. You need the market to be bouncing off support, resistance, or supply and demand, whatnot. The same confirmation checklist.
All right, thank you very much.
Yes, sir.
Thank you. Thank you.
So, Philip, no other question from you?
I'll have to go through this one first. Kind of look at my chart. Yeah.
All right, cool then. No problem. Anyone has any questions? Shamsuddin, good evening. I can't hear you. Even when you talked just now, I didn't hear you. Still not hearing you. Maybe it's your mic or something. So, anybody get any other question? Any question at all? Question. Oh, Lord. Okay. Shamsuddin, did you talk just now? Who spoke just now?
It's Philip.
Oh, okay. Let me go on.
I'm just looking at the EU pair.
Oh, okay.
Yes. Don't really look like a very volatile pair. More of a conserved pair.
Oh, it's very volatile though. Depends on the time of the month.
What time of the month is it actually very volatile?
Second week, third week. So first week is comme si comme ça. It's like it's not sometimes it's wild for like the first days of the month. sometimes, depending on how the previous month is ending. Sometimes the first few days of the month are wild. But so ECB press release messes EU up. Fed FOMC messes EU up, and those usually come up second week of the month. So you have NFP first week, you have retail sales second retail sales second week, you have FOMC or ECB second week also. You have ISM third week, and you have there is something for the fourth week. Can't remember. So, but they spread it like that. Shamsuddin, I can't hear you. It's like something is wrong with your mic.
What will you talk about trading? Before I entered any trade this period, I do go to my forest factory to check if there is any news. And I do look at those red, yellow, and orange. What do you talk about trading those reds? Because most times when I see red, I just tend to avoid the market. And sometimes it goes in my direction, sometimes it goes opposite. I just feel it's dangerous going into the markets when everywhere it's just red.
It depends. It depends on your psychology, how strong you are. All right. And one thing I usually say is do your technicals. If your technicals is solid, okay, the news will always push the technicals. All right. So the two of them work hand in hand. Okay. Both the news and the technicals. The news is telling you what the actual consumers are doing. Okay? The candlesticks is telling you the shadow, like is showing you the graphical representation of what those people are doing. So
wait, sorry. So the news is not what is actually pushing the market. The market is already working. Why the news is just saying what's happening in the market?
Yes, it's something that just tells you, oh, okay, the news is always 1 month late. The news is 1 month late. So if they are releasing interest rates, they are basing that interest rate based off of last month's performance. If they are releasing NFP, unemployment claim, unemployment rates, employment rates, it's based off of last month's data. Okay, so they are now telling you that last month, so amount of people were employed, so amount of people lost their job.
So you use
the news.
Okay.
Go on.
I'm listening. No, I'm listening. Let me just I'll let you finish.
Okay, so the news helps you to understand what the actual consumer or the actual consumerism is. Okay?
Okay.
All right. So you should not be scared of the news, but there are some news you should be scared of. Inflation rate, which is CPI, interest rates, which is FOMC also. You should be scared of those ones. When I mean scared, if you are using an unregulated broker, you are bound to get fucked up, all right? Because if you're on the wrong side of the market, the unregulated brokers, they use one word to defend themselves. They say slippage. A slippage is where your stop loss is not going to be filled. Even if the market reaches your stop loss, the market just continues. It does not respect your stop loss. It just continues to go. So those type of news release, I usually tell people, if you are not confident, don't trade it. Sit it out, until after the news, come back the next day, or wait for 4 hours after the news, sometimes 1 hour. But me, I usually wait 4 hours after the news. Then I see what the market wants to do. Then I know if I want to take that trade again for that day, or I want to come back the next day when everything is settled. Okay, so the technicals and the news and the fundamentals, they work hand in hand. You just have to understand that they work hand in hand. You just have to know that if your technicals is solid, then you just have to allow the market do what the market wants to do. Because some of these countries, they manipulate their data. If they don't manipulate their data, they are either not giving the full, all nasty manipulation, but they are just resilient with whatever they are doing. Okay. Yeah. So that's why you could have the market just catch you by surprise, and you realize that, oh, I was expecting more jobs, but now it was way less jobs than expected, or the inflation is supposed to increase based off of the data that they've been releasing prior to that inflation day. Then you realize that, oh, something is wrong somewhere. So those are it's not like it happens all the time, but once in a while, your technicals and the fundamental will just face different place. But that does not mean it's a problem. So
how do you get your fundamentals? Because most traders I view online, they mostly make use of the technical analysis, leaving the fundamentals.
Yeah, for me, I do the same way everyone uses. I use the Forex Factory. I use my FX book. I share some links, some podcast links to my students. That podcast explains news. So let's say today's inflation, today's CPI, the podcast gives an explanation of everything to expect, what we saw the previous CPI day, what we're expecting on that day of CPI, how the markets potentially will react to a negative or a positive CPI. This one. So there are materials everywhere. So I use all materials available to me, because it's just like that. Some people will not talk about it because they have no idea about it. So they will always want to have that braggadocious mindset of, oh, I don't need news, whereas actually everyone needs news. Yeah, so I do Forex Factory. I'm able to dissect it. I can understand the macroeconomics, the themes. There are different themes for time of the year. There are different things that are going to be pushing the market. It might be geopolitical tension. It might be quantitative tightening, quantitative easing. It can be uh, inflation, it can be bonds, it can be oil, it can be interest rates, it can be pandemic. So there are different themes. There are different themes for the year. Right now, it's more on inflation, interest rates, and geopolitical tensions between Russia, Ukraine, Hamas, Israel, Iraq, and all those other people. So people are going to be focusing more on jobs data and spending money. So they are going to be focusing more on who is bombing who has more gold, who is buying more gold. So there are different ways to dissecting fundamentals. I won't say it's easy. It's not easy. It takes time. Yeah. But Forex Factory is a good start for that.
All right, thank you. Thank you.
So, all right. Shamsuddin, is your mic good now?
Yes, I believe so. I just wanted to say hi, hello.
Oh, okay.
And thank you for the class. Yeah.
Hello.
I joined a bit late from school, but I was able
You always join late.
the price action. Like I just checked and I was like, I saw a notification. And then before you know it was already like 9:20, 9:30. But I think I joined when you were talking about. I think you were done with structure your price action or so. Well,
Okay.
yeah.
Oh, fair enough.
My own question is, I don't know what you're looking at for, like the week or it's already end of the month. So do you trade December or?
Yeah, I don't have
do you just sit out? Sorry.
For me, I no get work, so I will always trade. I don't have a life, unfortunately, so I'll always trade December. I don't have a life, so I'll always trade in December, regardless of what people say. So if I don't trade, what will I be doing with my life? So I'll always trade. But what I'm looking out for next week, I can only analyze that one tomorrow. I can't analyze it with you guys now because my analysis, they always take time. But EU looks bullish right now on the weekly. Yeah, still EU looks bullish, very nice bullish, because we have a final close above this level. So this high is 36. This close is 38. Okay, this high is 36. This close is 32.8. So yeah, it's a very good bullish setup. Potentially, we might see EU continue to push higher.
Okay.
Let's see the Dixie. Let's see DXY. DXY looks bearish, has a nice bearish engulfing on the daily. Weekly, still bearish. We might still see it go down a little bit. Or we might just see next week pull back. If next week pulls back, then we are going back up as per a retest of this level here, this tiny zone here. So, but right now it's looking bearish. It's looking bearish. Yeah. It's looking bearish. But now tomorrow I go really know. Tomorrow I will analyze again to really know what's popping.
Okay.
Maybe that tomorrow you can message me then.
Okay, I will.
All right then.
Can I message you?
Yeah. My DM is open to everybody.
All right. Thank you.
All right, man. All right. Any other question? Can call it a night. I'll upload this tomorrow on the YouTube. Yeah. Any other question? Question. No question. I'll take that.
One more question, please.
Okay.
Can I message you on Sundays to just have an idea from you on how the market will go weekly? Because I'm learning.
For Sundays, you can. But after me analyzing, usually I still dey wait reach like Tuesday, Wednesday before I really know the overall direction. I like to see price form. As price is forming, then I have my buyers.
Okay.
Yeah, so that's it.
Thank you.
All right, then. All right, thank you guys for jumping on this call. I appreciate. If you have any other question, you can send me a direct message. I'll upload this tomorrow because right now I won't go sleep back. All right then. Thank you. Take care. Goodbye. Yeah.
Thank you very much. Good night.
Good night.
Yes, good night. Good night.
Good night, yo.
Good night,
Wish you a
Ipa.
great trading week ahead.
You too, boss.